the fact that we had like a 20% drawdown and then a partial retrace and then we're having like another drawdown now, that's to be expected. I mean, you can have a 10, 20% move with not much of a problem, especially over a multi-month period or over the course of a
And
year. Yeah, I
yeah,
wouldn't consider that a crash. And I think a useful model is to look at emerging markets when they go through recessions or just in general when they're kind of in a malaise. Often the stock market's not going down big in nominal currency terms. It's doing bad in dollar terms,
yeah,
but it's usually doing fine in nominal local currency terms. And I think that basically when developed countries go through sovereign debt crises or things like we're having now, it's basically like a developed market with emerging market characteristics.
yeah.
And so either look, I use the 1940s analog a lot, but potentially more accessible analog for people is just look at emerging markets. I'm not saying the absolute basket case ones, but just like the standard quintessential emerging market, what do their recessions look like? What do their stock markets do in nominal terms versus, say, compared to dollars or gold or whatever? And I think that there's some comparisons there that are instructive.
Lyn Alden offers a nuanced perspective on the current economic landscape, distinguishing between a moderate drawdown and a full-fledged crash. Drawing parallels to historical recessions, she urges a closer examination of emerging markets as potential models for navigating through the current challenges. Anticipating a range-bound scenario with less promising real returns, Alden recommends a diversified approach, emphasizing assets like gold, Bitcoin, and selectively chosen emerging markets. In the evolving media landscape, Alden discusses the shift from gatekeepers to self-publishing and peer-to-peer interactions. While acknowledging the benefits of reduced gatekeeper influence, she underscores the responsibility on individuals to avoid echo chambers and actively seek diverse perspectives in this more peer-to-peer world. As we navigate through economic uncertainties, Lyn Alden's insights call for a balanced and informed approach, urging viewers to be vigilant, question narratives, and diversify their information diet for a more comprehensive understanding of the financial landscape.
So I would expect a range bound, and that range could be pretty big, and then not great real returns. Probably, we've had negative real returns since, like early 2021 or like mid 2021. Um, and I would expect that to continue for a number of years because I think that some of the more defensive assets, like literally, T-bills, tips, at their positive real rates are interesting now. I prefer gold and Bitcoin. I think there's some emerging markets that are attractive if you choose them selectively. There are a mix of assets out there that are interesting, but I think the ones that have been expensive and crowded into are just unlikely to do good returns. And that, things can correct in price or they can correct in time. They can just be in a range for a long time, and that is eventually a correction. And a common thing you see during the sovereign debt crisis is financial repression. So various ways to kind of keep financing to the government affordable while trying to restrict private sector lending too much and trying to restrict private sector capital flow. So, basically various capital controls. That was a place across the developed world in the 1940s. And when you see emerging markets like today, there are multiple emerging markets that have all various frictions on purpose for people that want to get their capital elsewhere. They basically add various hurdles to them. And so that's something we should expect. But part of that has to be done with narrative, right? It's like, in order to be successful, they have to have some degree of plausibility with it, which gets a lot of the public on board. And so, right now we've seen, for example, there's been a lot of misinformation in the financial media around how much terrorists receive financing from crypto. Right? That's
Yeah.
been a big thing, and it's been pretty soundly debunked now. Even the sources that some of those media articles used themselves said, no, no, this is completely misconstrued. The number's like less than 1% of what you said it was. Most of the financing comes from traditional existing financial rails. This is like a rounding error.
Right.
But that doesn't change the fact that there are certain senators and certain politicians that are like, look, we have to go after this now. This crypto is all terrorist financing. And if you could drill that in enough people's heads, when people get scared, they think, yeah, no, we have to block this. Like, it's just people are not very quantitative on average, and politicians will use that and just shape the narrative over and over again. And so I think that's a ongoing thing. Now, luckily, the combination of social media and things like Bitcoin or stablecoins do allow for more peer-to-peer transfer of information and value, which makes it a lot harder for them to do the types of financial repression that they've done in prior cycles. But that's not guaranteed. That's something that has to be protected, fought for, people educated on, lies kind of called out, well evidenced. And I think that that's kind of their basically there is a kind of cultural battle behind the scenes. And the reason I talk about that is because having studied the 1940s a lot and studying emerging markets today, this is actually a very common occurrence during these cycles to use kind of these temporary crises for permanent restrictions or to kind of shift narratives around to help get people more on board with the financial oppression that they kind of mathematically get stuck into. Yeah, they
Right.
can't just say, look, our decades of kind of just broad-based spending and tax policies have contributed to a uh, destabilizing situation, and therefore it's going to just kind of inflate on its own. They need an external reason, right? And so that
Yeah.
anything that they can use, they're willing to jump on. And in the prior kind of couple years, I think the Federal Reserve intended to be slower to raise rates in response to the inflation. They kind of signaled that pretty strongly, but the public reaction to that inflation was pretty, negative pretty quickly. And so they changed course pretty quickly. And so that was not enough cover for them to do what they want to do, but potentially a war is. And so I think that, we'll see how this plays out. But basically, the more that they can blame inflation on an external source, and then therefore also blame the need for capital controls and things like that on an external source, and to drive up the fear of security, that's really what kind of captures a lot of people.
Mm.
And the Patriot Act was specifically there was a recent FinCEN proposal to basically dramatically increase the reporting requirements on various private types of crypto transactions to the point where it's so broadly and vaguely worded that it applies to almost everything.
Yeah.
And so it's basically a pretty draconian thing, and they cite Section 311 of the Patriot Act as part of their justification for it. So that parts of the Patriot Act are alive and well, all these a couple decades later. Um, and so I think that's kind of a challenge. And going back to the gatekeeper point, basically in the old model, and this was largely just technology driven, what the limitations we had is that if you wanted to publish a book or if you wanted to have a radio show or have a TV show, these were kind of gate kept. There's publishers, there were broadcasters, and there's a lot of cons that come with that, especially in a less free society. A couple pros are that they filter out some of the, there's some quality filter to it in a healthy market. It's if the whole world's watching Walter Cronkite, they're at least on the kind of the same set of facts they're working with as they debate each other. But as that devolves into either more propaganda type of media or just more corporate captured media, that kind of disintegrates. And so the fact that technology has made it easier to self-publish a book or easier to start your own radio show or start your own TV show, literally what we're doing right now. These more peer-to-peer interactions bring down the importance of the gatekeepers, which is a net good. But then it takes adjustment to that because a lot of low quality stuff enters the market and people can get siloed into their own echo chambers, right? So where they have a bubble and they only follow people that are kind of just like them. And then they end up getting shocked at certain outcomes because they forget that they're in a small bubble and that most of the world doesn't think like them, but most of the world's in their own bubbles too. And so increasingly there's people in their own little bubbles. And so I think that as we have this more peer-to-peer world, it does take some adjustment and more responsibility on our part to go out and make sure we have a higher level view. Like what is this silo thinking now? What is this silo thinking? What silos am I unconsciously in that I might not be questioning enough, right? So I think it takes more effort on the part of the person and self-awareness on the part of the person to go out and actually, it's kind of like eating right. You have to go out and eat healthy things on purpose, and you have to go out and your information diet has to be somewhat diversified and somewhat, just a healthy thing.
In today's insightful discussion, Lyn Alden provided valuable perspectives on the current economic landscape, emphasizing the distinction between drawdowns and crashes. Drawing parallels to historical recessions and emerging markets, she highlighted the potential for a range-bound scenario with less promising real returns. Alden advocated for a diversified approach, favoring assets like gold, Bitcoin, and selectively chosen emerging markets. We also delved into the crucial topics of financial repression, misinformation in the media, and the potential impact of external sources on narratives during crises. Lyn Alden's historical insights and warnings about the need for vigilance in the evolving financial landscape serve as important takeaways for navigating uncertainties. As we wrap up, I want to thank you for joining us today. If you found this discussion valuable, don't forget to subscribe, like the video, and share your opinions in the comments below.